Broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. This is Bobby Rains here for our Investors Observer members only workshop. Let's get started. So our agenda today, we're going to do a little market update per usual, talk about what's going on in Investors Observer, and then the entire rest of the presentation is member-driven content. Questions, site demonstrations, anything else that you would like from us. We got a question or two ahead of time this time. We always appreciate those. You can send those at any point. Just send us a question the way you normally would through that help button on the website. And say, hey, talk about this in the webinar. Usually I'll give people a response back to that in the short term and then try to put together a little bit of a longer, more well thought out presentation for the workshop. So don't feel like you have to save questions. If you're stuck and need help with something, by all means, give us a call, send us an email in between workshops. But for, topics you're just curious about or something where you maybe don't need an immediate response or just would like a more in-depth answer, certainly that's what these are all about. All right. So like I said, just mentioned workshop. Okay, so market update time. 2 years of daily candles on the S&P 500. We, as you can see here, broke out to new highs. It's not super shocking to see us pull back a little bit, especially since we left this gap early in the week. There are some news reasons that also explain recent movement in ways that we will talk about in a little while. But we do have, because we kind of had this double top here, that should be the first level of support we see on the way back down, somewhere around let's call that 32.20, 32.25, somewhere on the S&P 500. That's the first place I would look for support if things started to go south. And then the round number at 3,000 probably comes in a little bit. And then the next line is somewhere here where these sort of highs and lows are there. We can look at that. So 6 months, again, right, up, I guess that's Friday. And then this week has been all down. It's not really surprising with this gap here to see it close. There's still a gap here. Maybe that closed it. But yeah, there's not really been a whole lot going on. All right, we'll talk about that on the next slide. But yeah, from a technical perspective, things have just been sort of up. And it's not super shocking to see a couple of red candles after 2, 3, 4, 5, 6, 7 in a row. Green. Normally 7 or 8 is about the most in a row you would expect to see of a given color, up or down. So, you get 7 green ones in a row, you kind of have to start to expect a couple of red ones at some point. All right, so what else is going on? Still, no one really knows anything about trade. We've moved from not reaching a big overarching deal to not reaching a small deal. From our point of view, the best outcome in the near term seems like a continuation of the status quo, whether that's under a so-called phase 1 deal or just we're not going to add new tariffs while we're negotiating. How they want to do that, I don't really care. But yeah, not adding tariffs is what the market is looking for right now. So yeah, that's the big one there. And then the Fed, the minutes from the meeting a couple weeks ago, I guess about 3 weeks ago now, came out yesterday, and it's basically the same. It's going to take a big shift in economic data to change rates in either direction. So you're going to have to see probably either, I don't know, probably something resembling getting awfully close to my guess would be rising unemployment, or a real sharp slowdown, probably for more than a month in hiring. Or you're going to have to see something that actually looks like inflation as opposed to just, things that have led to inflation in the past. A lot of the rate hikes previously were based on the idea that we've been at full employment for a while. It seems like wages and prices are going to have to rise. Obviously, that didn't happen, so Powell has been pretty adamant recently that he's, looking for data as opposed to just sort of, looking for data that supports economic practice. I think he actually wants to see inflation in the data as opposed to, things you can feed into a model that tell you inflation will be coming, because that hasn't worked previously. And yeah, the economic data is relatively stable. The consumer is still the strength of the whole economy. Things on the business side have been weak. That's likely due to things like the trade situation where nobody knows what's happening. Nobody knows what the price of imported goods will be next quarter, so it's hard to make long-term plans. So you have that, and then Brexit. They're going to have an election early next month, and maybe we'll find something out after that. Maybe, I don't know. They may kick that can forever. We will see. All right. So our question that was pre-submitted this week was, what is a calendar spread, and is it the same as a vertical spread? Some brokerages use calendar spread, and here at Investors we use vertical spread and diagonal spread. So yeah, in a lot of graphics, right, particularly in finance, right, I mean, even think about a stock chart, right? The horizontal axis is time and the vertical axis is price. Option spreads nomenclature is pretty much the same way. Spreads with the same expiration and different strike prices, that's this first example here. Those are vertical, right? So we're going up and down in price and we're not going anywhere in time. Spreads with the same strike price and different expiration dates are horizontal. This is your more traditional calendar spread. It's typically pretty much the same strike prices with different expirations. And then the diagonal spread is sometimes, depending on the brokerage, the calendar spread order ticket might be the one you want, just because a lot of times the vertical spread ticket locks you into one expiration for both legs, whereas calendar spread, they obviously let you use a different one. So sometimes calendar spread is how you would enter that, but diagonal spreads are, in practice, a pretty different strategy. They end up being calendar spreads because the expiration dates are different, but it's really different than a traditional calendar, which is looks more like this guy here. All right, so that was that question. And then we've had a number of questions about the new website, which we appreciate all of your feedback about that, good and bad. We're trying to get some bugs and some other things stomped out. We've eliminated a lot of them so far. And we're obviously happy to take all your feedback there. And yeah, in particular, the bug reports are happy because you guys just have a lot more eyes than we do. So one question that we get frequently is about where to find various information about a stock. So whereas the other site had, I think, roughly 3 different pages per stock, depending on what you were looking for, you had to go here and enter the ticker, or go to a different place or enter the ticker, or perhaps go to even a third place to enter the ticker. We've eliminated that here and put everything on one page. So news, this used to be under like the Market Intelligence intersection of the Investors Observer website. Now all of the news is on this main stock page. And yeah, the search bar is right at the top here on every page of the website. So you can get here, you can get the stock score report stuff, including the upgraded scores, the analyst projection chart, the data box, and the other chart is here also. And then on the options side, options are on this tab. You just click this options button right here. The out of the money covered call calculator lives here. The enhanced option chains you can get to from here. And then all the trades we have for that stock today are here also. So if you're curious about where that went, that is where it is. All right, so with that is all the prepared materials I had today. Not much has happened in the market really, and so yeah, it is on to the questions. All right, so Rick would like an update on the light vertical spread we have expiring tomorrow. let's see here, LITE. So our sold put here is at 68.50. Let's see here, the stock is at 67.15. So yeah, we're a little underwater on that right now. I don't think that number is exactly correct, but yeah, we'll be taking a look at that tomorrow. Sometimes things go down the day before expiration. Hopefully we'll get a bounce tomorrow. Otherwise, we'll send out an order most likely before lunchtime tomorrow. Lunchtime on the East Coast, that is. Tomorrow in terms of cleaning that up. But yeah, that's the report on that for now. Such as it is, I don't have a lot more information about it at the moment. All right, let's see. Daniel says, can some type of indicator be added so we know when we're waiting for a response? Right now, it looks like nothing is going on. We are working on that on a couple of fronts, Daniel, both in terms of maybe adding an indicator in one or two places and also trying to fix some of the underlying issues that will just make the site faster across the board, and you won't need to do that. So we're trying to actually attack that one on two fronts. And also thank you for your kind words there as well. So Ron asks about vertical spreads. We currently have only credit spreads and almost never debit spreads. Will we consider showing debit spreads? We have in the past in the portfolio done some debit spreads here and there. Again, I mentioned few of workshops ago, we're still discussing sort of how our sort of business strategy and product strategy is affected by our new sort of zero commission landscape. Debit spreads certainly become a lot more attractive under that landscape. The difference is with credit spreads, ideally you do the trade, you get in for a credit. If everything works out the way you expect it to, the options go away, and so you only have to pay one set of commissions. Right? There's opening commissions, and then if the trade works, you don't have to pay any other commissions because there's no commissions on options that expire. With debit spreads, you do have to trade in and trade out. There's no, ideally, there's no, just things expiring and going away worthless. So there's always been sort of double the commission load on debit spreads that there is on credit spreads. That's why we haven't really done them in the past. But yes, certainly it is a thing that we are considering, in terms of adding and maybe putting in the putting into the portfolios in the future. Yeah, Ron, I'm not sure I agree. So Ron follow-ups to say he understands the risk reward is better on debit spreads. I'm not sure I agree there. I mean, it really depends on sort of how you structure them. Yeah, I mean, you can change the risk reward on a credit spread by, having it cross the current stock price when you open it or something like that. And they end up functionally, if you look at the extrinsic values of the options, they end up being pretty close on the call side where you would be doing a bullish debit spread versus the put side where you'd be doing a bullish credit spread. It's really just a question of how you structure the trade. And so, yeah, moving closer to or bridging that current stock price, you can definitely change the risk reward, but you're also changing the percentage likelihood of your trade being successful. So yeah, I'm not sure it's really fair to say that across the board the risk reward is just better on debit spreads. But yeah, like I said, we're that's certainly on the table in terms of future product improvements in any case. All right, other questions? Daniel, we don't currently have plans to merge with E-Trade. Yeah, I'm a little surprised, I guess. E-Trade has long been the sort of next broker that people were expecting to get bought. So it's a little surprised to see Schwab apparently bidding for TD Ameritrade. Although, yeah, Ameritrade's a bigger company, and also I think the move to no commissions. Commissions were a lot bigger percentage of Ameritrade's business than any of the other brokers, so they probably took the biggest hit there. So if you're basically buying brokerage customers at a discount, Ameritrade maybe makes the more sense there. Yeah, exactly. But yeah, it is. I'm interested to see sort of what happens with E-Trade in that regard because yeah, they're the little guy and the big guys keep getting bigger. All right, and yeah, Schwab also has a Schwab bought Options Express. Well, I don't know, a bunch of years ago now. So they have a decent options offering already, and then they'll get the Thinkorswim platform, which are probably two of the biggest option platforms available to the retail broker, right, or the retail investor right now. So it'll be interesting to see sort of how they deal with that. All right, so Kavork has a question about Qualcomm, which is also expiring tomorrow. It was a little underwater the last time I looked. The nice thing, 8511. Yeah, so it's still, yeah, what's going to happen tomorrow is the sold leg will expire worthless, but the bought leg there expires in February. That's this trade here, so it's about $4 underwater right now. The bought leg expires in February, so we will look at selling another call against it or something like that probably. That's typically what we do is just sell another call against it, bring in a little more money, lower our amount at risk there, and hopefully the stock goes back up. But we'll probably figure out exactly what to do with it probably Monday of next week. We'll just let that call roll off tomorrow and then come back Monday and look at another option. And yeah, we'll send out an email like we always do with exactly the strike price expiration date and what you should bring in for that call when you sell it. So yeah, no action to worry to take right now necessarily. We'll send out messages to everybody when we are when we're ready to do something with it. That is our for those of you who may be new to the portfolios, that is how we do things. You're certainly welcome to check in with us from time to time if you have a position where you're curious about. We have at times posted notes here and there that we don't necessarily send out by email because email fatigue is a thing. But if there's any action that you need to take, we will 100% post it on the website, send an email, etc. So yeah, again, certainly welcome to check in at any point. But if we feel like we need to do something, we will let you know. You don't have to come to us for that necessarily. Okay, yeah, there is a message you will see from time to time that says, as was pasted in here, this app has received updates. If now is not a good time to reload the app, please reload. Yeah, it's not. Yeah, it's fine. It does not indicate a problem. You can either click to reload now or click reload later. You may not see the newest thing. A lot of the changes we're making right now are things you wouldn't see in any case. So you're not necessarily missing out by not doing reload now. But certainly if you're, in the middle of something, you can just hit reload later and it's okay. And it's not a sign that anything has gone wrong necessarily. You should hopefully see that less and less going forward as we get things under control a little bit more. Right, yeah, one reminder, all of our workshops are recorded. We'll send out links to a copy of the slides for this presentation, as well as a YouTube video, probably tomorrow morning sometime. And then the next workshop will be 3 weeks from yesterday, which by my math is about December the 11th. And then we'll have to figure out what to do for the one after that. The following one would be New Year's Day, which, we certainly won't do it then. We may bump it to the 8th, or we'll bump it to later that week. We'll see. But December the 11th is a good time to sort of think about for the next one. So we'll be doing that then. But yeah, like I said, you can always hit the help button here. If you have a question, that sends us an email and we will get back to you on that. Or, pick up the phone and give us a call. You can find that information in the footer of the website, which is way down at the bottom. The other thing that people have been asking about sort of as a theme is some account setting things. So you can set up your email settings here. Click this guy. It looks like a Head and Shoulders up at the top. If there's a particular email you don't want, please come to the website and unsubscribe yourself from it using this control. If you click the unsubscribe link in an email you get from us, that will unsubscribe you from all of our emails at a higher level. It's an entirely different system we have to go into to turn you back on. We can do it if it happens by accident. Don't worry about it. It happens all the time. But that will absolutely stop you from getting any emails from us up to and including like an email to reset your password at some point. So if you just want to, come to the website and don't want to get emails from us, opt out here as opposed to hitting the link in the bottom of the email, because hitting that link at the bottom of the email makes it basically impossible for us to get in touch with you in any way at all. All right, so yeah, you can also change, your subscription stuff here. I don't have an actual subscription because I work here. I also don't have a credit card on file, but you can do that through this page as well. All right, yes, if there's any other questions, please get them in now. Otherwise, I'm going to, sign off. All right, that seems to be it. Thank you all for coming, and I will talk to you in 3 weeks.